Today's Big Take looks at a colossal bond trade that's spooking market regulators. A small bunch of hedge fund traders are the driving force behind a massive wager on US government debt that's been giving regulators sleepless nights. For more details, we are joined by Bloomberg's Will Shaw, who co-authored this piece that is really worth your time and worth a read. Will, how much cash is involved? What exactly does this mean? What are the traders doing?
So just to explain the basis trade very quickly, traders are effectively speculating on a tiny gap between treasuries and futures. It sounds boring, it sounds niche. In fact, there's a huge amount at stake. Hundreds of billions of dollars are involved, and the trade has been gathering pace. Now, the amounts of money are really large, so the net short position in treasury futures, which is effectively a proxy for this trade, was at about $800 billion earlier this month, up from about $650 billion as recently as July, according to the Bank of England. So we've looked at a few of the key characters. They are Jonathan Hoffman at Exodus Point, John Bonello at Millennium, and Jonathan Tippermas at Citadel. Now, if you want to understand it from a money perspective from one of those, if we look at Bonello, him and his team made nearly $1.5 billion of profit in 2020. At the same time, in March of that year, they experienced losses of about $100 million. Okay. So the losses are very low, but the highs are extremely high.
Do regulators have any issue with the trade itself or the impact it could have on the market more broadly?
So regulators very broadly are concerned about this, and that comes from what happened in March 2020. Now, at that time, the market blew up spectacularly shortly after the Federal Reserve intervened in order to resuscitate it. So as you would expect, that's got the regulators on edge. The SEC last week voted in laws which will have the effect potentially of making this trade a bit less appealing economically.